Hello dear traders, petar.jacimovic here. I want to let you know about my view on the Japanese yen and the current position and my expectation on this currency pair in the next period. I didn't post so often on my YouTube channel because I was very busy in past weeks and so on. But I'm still here and I want to let you know about potential new trading ideas and so on and so on. This is my entry on the Japanese yen based on the price action and based on the Fibonacci work and so on. I really enjoy the concept. I'm trading the different concepts basically depending on the market conditions and depending what I see on the market. The most important thing is to actually control the risk and understand the risk reward side, understand basically the reason why you will position. There is actually no right way to trade or something like that. You must find your way. I'm offering my YouTube channel different kind of perspectives. I used a few months to trade the market profile and so on. So if you, for example, if you enjoy the market profile analysis and so on, you can find that very useful. Also, I posted analysis using the Ichimoku cloud and the scanner and so on. So, for everyone, you can find on my YouTube channel, different perspectives, different kind of techniques you can trade, and then you just need to practice that technique, master technique, and then do your homework and basically try to find things that suit you and your style of trading. And I'm not more, let's say, intraday oriented. I'm basically the swing trader, position trader. I also have I do the full-time stock trading and so on. So I don't have so much time to actually trade a whole day or stuff like that. But I try to find the good swings and try to identify, using. In this example, I'm using the Fibonacci work based on the JD Napoli work, Fibonacci ratios, and how you can apply in your trading to achieve potential good risk reward entries. And this is one example of entry based on the Fibonacci work and based on the Napoli research and so on. So I identify this in the chart, and I actually bought small size here, small lot by 0.2. Always take care of the risk in the first place. Never risk more than 1% in any single position, even if you're swing trade. 1%, is something which I advise you. Never extend the risk. Risk is the only thing that basically which we can control like traders. And if you break that rule, that will not be good for your account and so on. So you must keep your risk tight. Understand that when you're wrong and that your idea is wrong, and then try to let a profit and see how the position will develop. Okay, so this is a year Japanese yen chart. It's a 1 hour time frame, and I want to show you here there is a series of the higher highs and the higher lows. We started this. I'll just back here. I hope you see my my line here, my mouse. So what happened here on the 1 hour time frame? Price was some kind of consolidation for about 50 hours. Let's say it was about 2 days of consolidation. The price, went lower, and sellers potentially could trading the breakout strategies and stuff. They got caught here because this is at the end. This is a very common on the forex market due to the lack of transparency. We don't have actual volume here, so we don't know is this breakout any significant by the volume itself. This is a over-the-counter market, so all you see is actually price for itself, and these types of the breakout strategies very struggle a lot because there is no actual you cannot read activity exactly what happened and who actually sold or bought, and that's very different because if we compare the stock market to forex market. Anyway, here we got the classic fake breakout of the lows. As I spoke in my video about the forex manipulation, you can check about that. This is what I do most often. I just take some lows, we call also this the floor or support, or I could call the ice. So you can call it like that, but it's actually the same. It's different names for the same thing. Basically, this was supported many times, and price went lower, and most of the traders think that's it. We're going to make new lows and stuff like that. This is going to go lower because this is at 2 days base, 2 days consolidation. It actually planned spike higher. That can be on the news or whatever, or just regular price action. Price spiked up very strongly for that day and reversed totally and went about 300 pips in the next few days. So this is a very impulsive move. In my opinion, I expect a higher price in the Japanese yen. Then I did a Fibonacci war here, and I found that Fibonacci retracement 61.8 percentage is near 113.50 for 53, and then there is a Fibonacci retracement for the different reaction number at the 113.57. So very similar. We have we call this confluence, Fibonacci confluence level at this point, and price stopped exactly, guess what, at that point, and that was a very good. So right now my stop loss is below all of this these smaller swing lows you can find in 1 hour, because if the price go below that and go about 50 pips lower, this will probably go to test this demand or 61.8 and 112.85, and in that way I want to close immediately when I see that I'm wrong here, and I want the price to prove. So if I'm wrong, price should go about 50 pips and I'm out. But in return, according to the Napoli work and according to the Fibonacci expansion and the Fibonacci projection, we may expect, first of all, the retest of high, something which we may expect 114.72, let's say 114.70. But according to the Fibonacci expansion, the first, absolutely the first expansion, if we watch this low, this high, and this low, if we project, the 115.40 is actually my target. It's 150 pips risking 45 pips, and this is our actual first target. So imagine that. So if we are correct in this one, if the price actually proved this to be right, this is the first target. The second target, in case the price actually go and take the first target, is set at the 116.60 area, and this is about 250 pips. I actually may decide, and potentially, if the price go and reach my first target at 115.40, I may actually split and exit a half of my position at that point. I would probably do that and let the second half for 116.60, right? For in the next pair. That can be in the next day, next few days, and so on. Depend on the market, volatility, and so on, right? And final target, if you want to actually, someone want to hold, this is extreme target, so I don't advise you hold it for this. But if you see that price actually going through this very easily, this can actually to 118.45, which is actually 440 pips potential target. So this is a free objective point. According to Napoli, the first is of course most tested. The first is most met by the price. The second is also probable, big probability for the 100% expansion from this move. And if there is enough, again, demand, and you see the strong price action go very strong above this Fibonacci 61 and 100, then 161 is 161.8% will be the target. My goal is here to actually scale the 61.8, for example, half position, and let the second half to ride, for example, for 100% expansion. Try to take 250 pips, risking 45 pips. So we'll see how this will play. The only thing here is you need to have the patience for this. This is a position swing trading based on the 1 hour time frame price action. And I found the confluence, I found the impulsive move, and serious the higher lows and the higher highs. So I see this very upward. Of course, it depends on a lot of things. You know, tomorrow there is no big event or stuff like that, but maybe for 2 days I think there is some news in the US, but there is plenty of hours to without any large event to create a chaotic movement, or I call this chaos on the market. So I took the entry basically 113.95, and so far I'm in plus about 9-10 pips. And as I said, this is the beginning of the swing. If I'm correct, if this is a correct confluence, confluence is there. So I found a confluence and I trade because this strong impulsive move in the background, strong price action, and price exactly tested this level. I like the series of the higher highs and higher lows. This is a good sign of the strength in the background, and I put a stop loss to make sure that they won't retest this or stuff like that before the upward movement. I put below these reactions, this swing low and this small swing low, these swing lows here, and then that's my protective stop loss. Okay, so in this example I use pure price action. Pure price action. I used and Fibonacci work, retracement and expansions. And one part of my mentorship program has absolutely Fibonacci work, and I have my mentorship program 30 days course where I covered from my experience of the 8 years of full-time trading. I cover most reliable techniques, most successful techniques which I use in my trading the forex market. Okay, so I cover the market profile. I teach you how you can try to trade a responsive interest, and teach you all about the basic and advanced market profile. So if that suits you, we cover that most of my program. If you like the Ichimoku trading, I teach you the best optimum way I found to trade the Ichimoku, or your intraday or a short-term perspective. It doesn't matter. I teach you the process and everything. If you like to trade pure supply demand zones, that's not a problem. I can teach you that. And of course, if you like to trade patterns and stuff like that, harmonic patterns, regular patterns, I'm here also to teach you that. So I have a big pool, let's say, of knowledge, different techniques, which actually how to say that, where I actually found the most success. So I will not teach you any strategy. I teach you the most, in my opinion, in my 8 years of research and work and everything. I teach you what worked for me, where I got success. Different types of market creates a different opportunities and different strategies. Trading the forex, and you need to actually adapt to the market. You need to find your some of these trusted techniques. You need to actually understand them, and if you see them, if you spot them on the market, on the chart, to ride that. Okay, so that will be all for this video. I hope you enjoyed. I'm bullish on this Japanese yen, and all I can say, you wish you good trading and trade safe, and we'll see how this will develop, and I will alert you about if we hit this resistance or first target, and or 61 point in expansion. Feel free to post your comments if you like this trading idea. Feel free to contact me on the Skype for we can talk about the mentorship program if you're interested to learn. Again, it is a 30 days course where we do about 3 to 4 hours per day in that program, where I teach you all from the basic to advanced things, the different strategies which I tested in my 8 years of full-time trading the forex. I start also to trade the stock market full-time. I can teach you if you're interested in the stock trading, but generally I teach you the trusted techniques which I using in my trading, including pure price action, including the Ichimoku market profile, reading the TPO chart and the histogram, classical patterns, what is the optimum time frame and what is the optimum way to trade the patterns, and I teach you the Fibonacci work combined with price action, and so on and so on. So if you're interested, if you're really serious about trading, you should finish this program, and you will have a big pool of knowledge I will teach you, so you can apply that to your trading and increase your success in this business. It's not about, as I said, it's about the risk control, it's about the understanding the reward side, it's about understanding the strategy you work. So I can teach you to be basically profitable, and to have the right mindset to trade any of these strategies. I will teach you, and so it's up to you to choose what type of trader you are, intraday trader or short-term position trader, and then to use the technique you actually like and enjoy the trade and master that technique and so on. Okay. So that will be all for this video. I hope you enjoyed. Again, take care. I hope you're doing good and trade safe. Bye bye.